So foreclosure fallout. I know it's, clickbait. Well, maybe not really, but it is slowly starting to happen. Winning with short sales in a shifting market. So that is definitely happening. The market is shifting. Is it a foreclosure fallout? Maybe not yet. Are we heading in that direction in some cities? Maybe, right? Especially in Florida and maybe a couple, in Texas, Austin, around those areas, and others maybe that Alicia will share more because she is kind of not kind of, she is involved in negotiating short sales. And this is why I wanted to bring her on today. So Alicia, I'm going to spotlight you. Can you say something so I can find you in
Hi.
here?
Yeah.
There you are. Let me spotlight Alicia. All right.
Hello.
Alicia, there she is. So she goes from being in a distressed market back during the last crash to then
Yep.
being an awesome nurse back to the market when it's heading into the distress. So
Yeah.
this is a pretty cool perspective. Why don't you share a little bit more about kind of your journey that's right here on the screen?
Okay. Yeah. So like what you just said, it was just the capture back in 08, 06, 08, all that time frame. I was running a real estate appraisal business with my family members from 05 to 09. That crash hit us hard. We were running a full-time real estate appraisal business during that time, and that's when I decided I needed to go back to school. And I became a registered nurse. I fully engaged in that. I was also a full-time mom, so I fully engaged as the registered nurse. And got done with courses in 2015 and was working in the field at that time. Float nurse, loved it, absolutely loved it. But I also would go home, working full time and say, I want to invest. I want to work on properties. I was always telling myself during that crash, I wish I had an opportunity like this to be investing at this time. I wish I was prepared. So here I am. In 2021, I started shifting back into that. It was kind of crazy in that time frame for registered nurses. So I just decided, hey, I'm going to go back into real estate and started anchoring myself towards that way. I started just with investors, helping people in distressed markets, do cash buying, things like that. I was not licensed at that time. The last few years, I teamed up with a group called IPA for REI. It's William Bonnell and Rick Hamrick. They collected like a mastermind. I've been working with them for several years. They've basically handheld me and taught me how to be a specialist in foreclosures, short sales. We're currently running 48 short sales in our business right now as I speak today. We closed 5 of them last month. We're working in markets all across the United States. To Randy's point, those hot markets are in Florida, they are in California, also Arizona, Texas, Georgia. We have them in Colorado is another one that we're seeing more and more of. And Arkansas is something that's popping up more and more, in addition to my Kansas City market, Missouri, Kansas, and Illinois. So St. Louis, we're getting many referrals all the time. So that's kind of how our business, I was actively seeking out, folks on my own, doing that kind of lead generation, working at the courthouses and getting a lot of those leads. But then our business took off so fast that we're getting so many referrals to help us run the short sales. Nobody likes to do them. So we are just basically doing the nuts and bolts of everything, getting the short sale approved. We're working alongside of realtors. We're working alongside the investors. So we get referrals from both markets and basically facilitating that. And it's going well. It's busy. We're scaling it. We're just continuing to train more and more folks, more people that join the IPA for REI community back us because they've been training along with those two guys. And yeah, it's exciting. It's great to be in a position where I'm able to make income in order to turn around and help those folks that are, they're very relieved. We have all these glory stories of folks that are, upside down, and we help them bail themselves out of that situation. At the same time, we're making opportunities for investors, and we're also making opportunities. I'm excited to invest this time around as the boom goes. So, and that boom lasted. It started in 2006, trickling. Everybody says it's 2008, but it really started in 2006, and it
Yeah.
lasted until 2014, really. It's when it kind of finally tailored off. So now we're right back in this position.
Yeah. And if you don't know, I actually got into real estate in 2006, at the end of 2006, and I was literally learning short sales.
Yeah.
scratch with some of my first mentors. Jeff Fallon knows them, Than Amaro, JD and Paul and Conrad and those guys. So I got into the market basically at the same time like you did, learning, in the distressed market. So I had no idea. Realtors were kind of falling off left and right because they couldn't pivot. They didn't understand how to pivot. And that's all I knew. And I got my real estate license. And next thing you know, I'm listing short sales. I'm negotiating short sales. I get an REO account. Like I was like in the middle of it all. So I totally understand Alicia's language. And this is why I got excited when Steve, who actually is on here, Steve Stack, he's on the listening in. Oh, there he is. Steve Stack is waving. He introduced me to Alicia a few months ago now, or I don't know, maybe 4 or 5 months ago. And I couldn't wait to talk to her because I was like, this is coming. And I know that the hardest thing to find is an excellent negotiator, right? If it will change your whole business when you're in that distressed type of a market that we're heading into and are in certain states and cities, right? And so I value negotiators, really, really value them. And so anyway, so back in 2006, 7, 8, 9, I had an incredible negotiator, right? That we paid her very well because they did a lot of the work I did not want to do, right? And they had all the systems, they had all the connections already made within the banks, so they could get things done much faster than I would, period. Not that I couldn't do it, and I've done them, but I don't like it. I'd rather be out there networking, getting the opportunities and pass those along to a company that specializes in it. So I honestly couldn't wait to get to know Alicia, and when we did, we hit it off. We had a lot to talk about, and I wanted to bring her to you guys eventually. But we wanted to wait. We wanted to wait until things a little bit, she gets things a little bit more polished, right? Because she's experiencing pretty significant growth. It's not a bad thing, right, for her, but it's also it's a lot. It's a lot when you're trying to grow, hire staff. And I just told her, I was like, Alicia, whenever you're ready, you just tell me and I'll get you connected to people because you are needed, period.
Yeah.
So that's kind of how and now she's actually part of EXP with us. I know many of you here are at EXP. So our audience, so you understand, Alicia, is a lot of EXP agents, a lot of investors, right? That's our network because obviously Eric, myself, we are at EXP and we are also investors, right? I come from the investor background, so does Eric. So we bring those two networks together at these type of interviews, trainings, depending on, month to month, it changes. And that's our brand, Investor Agent Nation. So a lot of investors are also licensed, right? And they mainly leverage that license for their investing business. So that's pretty common in our community. So, and which one is Rick? Just so we know, Rick is on
Rick
the
is at the
screen.
top right. He is kind of, I call him my how guy. Like William has given us the platform. Like I have it on another slide, but he started kind of about the same time. Well, back in 2000, he's been in it for 25 years. He was one of the largest REO brokers in the Northwest Hemisphere for a long period of time. So it's just kind of like he had the map as far as this is how you do it. And Rick is the systems and processes guy. So as far as, bringing in all these different nuances with the homeowners and the investors and everybody in the banks are huge, but those guys, help structure it. So it's a really great partnership. And that's who handles the files with us when we bring them into the system. So Rick's on the right, William is on the left.
Awesome. And then if
And
you guys
here's
can't
Randy.
recognize,
He's
yeah,
that
if you
guy.
can't, I rarely not wear a hat, but this is me. If you can't.
Yep.
Uh,
So that just kind of highlights our partnership. And Randy and I just found out we just celebrated a birthday a week ago. We have the same birthday, which is kind of fun. But yeah, just bringing in that piece of, being a realtor and also the expert real estate consultants is the business I built along with the guidance of those two guys. So those are kind of the vehicles to help bring in and help people like yourself.
Awesome. Well, we're so happy to have you. So let's honestly first start with the basics, right? Because I know you and I, we understand short sales, right? And we can't assume that everybody knows what a short sale is, right?
Mhm.
So I always want to start with the basics. But before we go there, how about why are we even talking about it? Can you maybe explain? I know you pulled some of these slides for us that I selected here, but tell us, why are we even discussing this?
Okay, and slides are not my strong suit, so I saw a couple errors on the other one, but just please forgive me. We are busy with a lot of files, so I just kind of threw it together. But the reason why we're discussing, just kind of like before in the precursor between 04, 05, 06, those were high volume markets. We had a really great market. It was on fire, and then you continue to grow, 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 and it bubbles and then it crashes. So that's what we really experienced, and everybody felt it in 2008. This is the same kind of trajectory here. When we had a really good high pace market, you can kind of see it illustrated on the graph. It was 2019, we were still doing pretty good. And then 2020 obviously faltered, but then that boom hit. We had over, everybody remembers, hey, sight unseen, I'm going to offer, I'm going to go 20,000, I'm going to go 50,000. I don't care. We'll pay over what the bank is asking. And a lot of those folks bought it sight unseen. They bought it eyes, blindfolds on, nose plugs in. They were not really seeing what they're getting. So we're having even a lot of folks that have their houses for a very, very long period of time and had a lot of equity, but then they had to borrow money. They had to get a partial claim as the COVID hit. They were out of work or their family members. So they went ahead and borrowed money against their house. And then their office oftentimes not keeping up with their house. So they are now in a place where their house is upside down, those long-term homeowners. And then we're seeing a ton of people that bought from 2020 to 2024 in those more so like 2023, end of 2023, hyperinflated market. They realized that it was just a bad remodel job. They bought it, and this is wrong. We have one that just had a septic system completely blow out, and it's the foundation is leaking the septic system into the house. So we're talking $80,000. These homeowners have been in it for 10 months before they realized this. We've been working with them for a few months now, but they got the loan. The bank didn't know it. The appraiser didn't catch it, all during kind of that COVID era. And now they're upside down, $80,000. And they're obviously not going to pay for the house. So we come alongside them and we're like, hey, we're going to help you out, to work the short sale. Some of these are small banks. We have the nation, the repertory banks. There's a lot of banks right now, a lot of places like Rocket Mortgage or Mr. Cooper that are buying up all of these small servicers because there's a boom coming. They're just sucking them up. If you look at the acquisitions, they're all focusing on the fact that these people are defaulting. So that's why we're talking about it. There was also FHA, or I say, let's start with VA. VA, we had the COVID kind of moratorium that was going on. People are getting the partial claims and, the forbearances. And a forbearance is where you just don't pay and it kind of tacks on to the end of your loan. A lot of folks didn't know it was tacked on, but those moratoriums were ended or that waterfall is ending now September of this year. So the fact that that's still going on and that COVID waterfall is still going on and people are able to access it, think about what's going to happen with those millions of homes that are going to not have that waterfall option come September. So that's coming. What is already happening as of this May of this month, this year, there's a VA moratorium. There's millions of VA loans out there. They were really struggling. So back in 2023, they went ahead and started a moratorium. Every VA person that we've ever talked to that comes to us for help, we're like, hey, can you go to the moratorium? They haven't had to pay this whole time. If they wanted to go ahead and opt out of that and do a short sale, which many of them have, they go ahead and do that. But we're talking about it because they've had these moratoriums in place for years now. So some of the folks that I talked to haven't paid in 6 years. So it's definitely here. It's there. If you look at FHA, there's over 1 million FHA loans currently. 14% is in default. So
Wow.
14 is a huge number. And if you want to look at statistics, we were at 11 million historical context, 11 million defaults back in like the big housing market crash. We're on track to eclipse that by far.
Really? Wow. I didn't even know that that's how bad it's getting. Interesting.
Yeah.
Okay. And then right now, which markets? I know Florida, right? What markets are you seeing are obviously experiencing some of the worst so far?
Worst so far is, I would say, Florida, the northern hemisphere, like up in Massachusetts and all those areas. We're seeing more of that only because we're very closely tied in with Williams Group. He sees, the underground up there very frequently. In my wheelhouse, completely Colorado. I'm seeing more and more of that. I'm seeing more in Texas. I'm seeing more in Arizona. Obviously, the Kansas City market, mostly the 48 sales that I'm working on now are primarily, I would say 40 of them or so are in those Illinois, Missouri, St. Louis, kind of Kansas City, Missouri, Kansas City, Kansas, Overland Park. Steve Stack, who's on here, has a few with us here in the Kansas City market area as well. So he's a realtor and he's just like, hey, this is somebody went to him to sell the house. It's upside down. He brought it to us.
Got it. Okay, cool. All right. And then you had this one, which I agree. The builders are really doing some big incentives, which is a big sign, right? So tell us more about that.
So basically, it just speaks for itself as far as when you're a builder and you're putting in so much, interest into a house and you're putting all that capital into it. They're creating a major incentives and also taking losses because there's such a high inventory rate for new builds, and it just kind of speaks for itself. It's at the highest that it's been in 15 years as far as unsold properties. So that's another big tail sign of why we're talking about short sales and why we know it's coming.
So like for you guys, if you see builder offering big incentives, that should be a sign that there's people probably struggling. Because what that also does, it starts, what they're trying to do, builders first, is not necessarily sell their properties for less money. So instead they're trying to maintain values by providing incentives, right? But essentially that also busts, right? If the market keeps depreciating, and I'm already seeing that in the Tampa market, they were trying really hard not to lower prices. So they were offering, 4% commission to the buyer's agent, $25,000 in closing costs and rate buy down to the buyer, 5% rate. I mean, they're trying everything they can, but not lower prices. And then once you start seeing them lowering prices, that's the next phase of panic, right? That they enter because they're realizing, wow, the incentives are not even working to the point they wanted. And that's already happening, I know, in Florida, in the Tampa market. Prices are dropping even for new builds. So what does that do? Well, now you have regular retail sellers competing with new builds that are not only dropping prices, but they're also throwing all these incentives that a regular seller mostly cannot do, right? Because the builders, they have big contracts with their internal mortgage companies. A lot of them own those companies or are partners in them. So they spend millions to buy down rates. A regular seller cannot do that, right? It will cost a lot of money to buy down the rate to a 5% rate when rates are at 7, as an example, right? So the competition is now all of a sudden driving down values for your regular non-builder properties, right? And that's how it starts impacting, like the builders are now impacting the regular market as well. So keep an eye on that in your market. That's a tail sign where things are heading.
Yep.
So like I said in the beginning, I do want to, kind of do the basic one, like explain a short sale in the simplest terms for the people that maybe don't understand what a short sale is.
Okay. Well, I mean, the PowerPoint says it, but it occurs when a homeowner is forced to sell for less than what is owed with the mortgage. It helps avoid the foreclosure. So a foreclosure will follow somebody up to 7 years, just like a bankruptcy can follow somebody up for that long. If you typically go through a short sale, that you can be back on track with your credit and what you're needing to, there's the impacts. You can go back and get it repaired within a year or two, maybe 3, if you see it there. I've had 2 people that we've helped in the past that now have already bought a house within 2 years. So it's a little bit curved on that. But foreclosure and bankruptcy, those things really impact people for a very, very long time. So they want to avoid that at all costs. We tell everybody to avoid it at all costs as much as possible. Working through a short sale does take time, but it's worth it in the end. Sometimes you can get relocation fees. We're seeing those, they were really tight on those, and then we're starting to see them expand and expand and expand. Now that we've actually literally watched the servicers redo their models as I've been working with them for the last few years. Now that we're getting more and more and more, they've completely started to restructure how they are processing the short sales as well. And it's completely different from what it was in 2008 and 2009.
Really? So I
Yeah.
would like to, well, I want to ask that. So Eric, don't forget that question. I want to know what the difference is. So let's ask that question. But before we go there, so this is a really good point. So in distress, people do have options, right? And loan modification, usually you're going to hear people talk about the most common thing you're going to hear when you talk to a seller in distress, they're like, I want to keep my house, right?
Yep.
Well, that's normal, of course. Like no one wants to move if they enjoy where they've been living, created all these memories, right? But they tell you, but the next sentence is like, well, I haven't been making my payments. Okay. So first thing you would do is I don't necessarily recommend that you do the loan mod. You guide them on how to do it. There are attorney firms that even do it and charge people. I don't think it's necessary. You know, they can call the loan modification department. I would love to know about how you guide people on the loan mod if they want to, you know, pursue that. But you and I know that most of those will come back to you for most likely a short sale help. And case in point, I just talked to a seller here in the Tampa area. It was last week actually. And she was like, Randy, I wanted to understand a little bit about the short sale process because she got an email from me. I do some email marketing here. And so I got on the phone with her and she's like, well, you know, I just, well, this is interesting. She got a letter from what she thought it was a representative of her lender, right? That they would be helping her with the loan modification, right? And I had to break the news to her in a nice way. I'm like, by the way, most likely they are not associated with the lender. That's just very clever marketing, right? Now, I also knew that she paid them for the loan modification processing. So I was just like, look, nothing against that you chose with them. I'm sure they're a good company, right? Just know that most likely the chances of a servicer lender promoting a company that's going to charge you are very low, like probably zero, right? So but I said, but I also told her in the same breath, like, look, but at the same time, don't be ashamed that you paid them because you probably might not want to do it, right? So it's okay, like as long as they do what they told you they're going to do, right? So she now literally within the last week actually paid this law firm that is now submitting or is about to submit the authorization form so they can talk on her behalf with the servicer and then help her basically submit a loan modification to the bank. And then I was like, well, do you want to even stay in this home? And she's like, well, the HOA is kind of getting a little crazy and the fees went up and then during the last hurricane, the water came really close to the building and like she just started going about all these negatives. And I was like, which again, very typical in some cases, right? And then I was like, great. So it sounds like you probably, you don't see yourself living in this property long term. She's like, no, probably not. And I just said, look, listen, you're missing payments, right? Yes, the attorney told me that I have to if I want to pursue a loan modification or a short sale. I'm like, okay, well then just let them do their thing. You'll probably end up living there for, the next 4 or 5 months, not paying the mortgage, save the money, get yourself back on your feet, right? And then if you decide even afterwards that you don't even want to accept the loan modification terms that they provide you, then reach out to me and then we're going to start the short sale and that will probably take another 4 months. So, that will allow you about roughly 6 to 8 months of being able to take that money and put it aside so you can get back on your feet. How does that sound? She's like, that's perfect. That's what I need. Like, this is what really the conversations are about on the beginning. And Alicia, is this typical what I just experienced with that?
100%. That's 100% what it's about. I mean, people that know what we do, and if it's already one of our partners that have referred it to us, they've had this conversation. When I was pulling the notice of default list and doing that myself, I was talking to people sometimes before they even knew that they had a judgment with the court. 100% what we're seeing is people are like, hey, I want to stay in my home. And I'm like, hey, I want to help you. It is very easy for me to redirect somebody and tell them bullet points of how to help themselves. That's really why one of the reasons I became an EXP agent is because I had hundreds of people literally saying, you helped me when I needed it most. If I ever sell my house, which the statistics are, I believe it's 72% within 3 years of falling behind a default, they need to sell. So even if they are able to do the loan mod, even if they are able to help themselves, I saw an opportunity. If I did the right thing at the right time for free, it was a good opportunity for them to come back to me when they needed me, and why not? I'm an agent now, so let's go. But to your point is they want to know. They want to know what their options are. They want to know that some of them just don't talk to the bank. And I'm like, talk to your bank. It's easy. Just talk to them and see what your options are. And even still, if we're working for a short sale, 99% of the time we have to go back to them and say, okay, your bank gave you this option, and they're like, no, because oftentimes the rates are going up, the thing is going up, or they have a 42-year mortgage or something like that, and they're just like, no, 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 that's not going to work for us. So we still want to go forward with the short sale, but they get the options. And no, we are not, it's not a money making opportunity. The whole IPA is income producing activity. It's not an income producing activity for us to help somebody with a loan mod. So I would like to direct them. I don't mind armchair advice. I don't mind sending them to an attorney if needed, if that's the best thing for them. I don't mind sending them to a realtor if I feel like that they have, if it's not something I'm in a market for, say, hey, no, go talk to somebody. So those are things that these folks need to hear. They need to hear exactly what you took them through is here's your options. And somebody just asked in the chat about the buyer side. I can touch on that if you like a little bit, if you want me
In
to
a
go.
moment. But I
Okay,
want to ask about, so from the people that you've been talking to that are in the phase of loan mod, right? Because eventually most of them will move to the phase of short sale.
correct.
Like, what happens? What are they experiencing, and what are the servicers offering them, if anything, that makes sense? Like for the 15% or 17% that you mentioned that actually maintain and get the loan mod that they like, why? What are they being offered that you've seen?
Some of them are just their situation changed. Oftentimes they're being offered a higher rate. They have like kind of a 6-month payback, so they're adding on to their mortgage every month. A lot of times is one of the things they're like, okay, well, if you pay your regular mortgage and it's already gone up because interest rates and inflation, so you're paying a little bit more on the previous mortgage statement for 6 months so you can catch up, or they're just being tacked on to the very end. But that's where that waterfall and the COVID kind of bailout is stopping. Those the partial claims, those things are stopping. The VA already stopped in May. The other one is stopping in September for FHA. So those options are kind of going away, but that was what the options were for a few years was, hey, here's a partial claim. Here's $12,000. Oh, you fell behind again. Here's another $15,000. And it was all tacked onto the bottom. Right now, we're seeing people just getting higher and higher rates for their monthly. And they're like, I can't do that.
So
There's no way.
they're not restructuring any of them where maybe they will, give them a lower rate or anything. Is that happening?
There's a few that actually obtain that because their income is high enough, it's good enough. There's some things that have changed in that person's personal life that gives them that opportunity. But right now, we're seeing a lot of servicers that are frustrated. They're frustrated with them, and the homeowners are frustrated with their servicers because they say that they're going to get on track, and oftentimes they're just not able to.
So
They try as much as they can, but what they're experiencing as far as the homeowner's perspective is sheer frustration. They're completely worn out most of the time. They want options from their servicers. They are trying to be more helpful. We see like a little bit of it's kind of like alligator arms. It's like, yeah, we want to help you. But they're not really extending the things that they need to be actionable and help those folks in a distressed situation.
So I guess, so just to kind of finish the loan modification topic. So what I'm kind of summarizing I'm hearing is that the servicers, really the most common thing they will do is like, okay, we're going to take the 20,000 that you missed over the last 6 months. We'll put it to the back of the loan. And then let's just start fresh in August with the
Yep.
same monthly payment that you had, and they're not
Yep.
really changing the terms necessarily.
Most people are failing they have a 3-month trial period, and most people fail in that 3 months.
Okay, so okay, that makes sense. Okay, so I want you guys to know this, because why is this important? It's because the first thing you're going to hear from people when you're dealing in this, environment of sellers in distress is they want to stay in their house, and a lot of realtors and investors are like, oh, okay, well, I can't help you, and they move on. But you need to stay in touch with them, right? Follow up, because the chances are, she said, about 80 or so, 85% of them are going to come back and either get foreclosed on or do a short sale, right? So all the name of the game in this market is to fill that pipeline, regardless if they're loan mods or not, because they will come back. So, okay, we're done with that. So
a
then,
stacked pipeline full of people that tried the loan mod option. We were just very meet them where you're at. I'm a nurse. I come to where you're at. I'm going to meet you where you're at. I'm going to give you the best advice. If that's what your goal is, I'm going to make that my goal. And I'm going to give you the best advice I can to speak with your servicers, to speak with an attorney if you need to. But most of the time they can do it for free. I'm like, just go to call your servicer, ask for this. This is what you need to send in your paperwork. You need to give them what they ask for. If they ask for this, make sure you get it and then follow up to make sure they got it. It's going to take hours and hours of your time, but do it if that's what you really, really want. And then they call back, a month later, or I call them, hey, how'd it go? How'd that loan mod go? Did you get it? Did you get what you needed? Nope. Okay, so now what? So that's when we move and we pivot.
yeah. And they're
Yeah, we just
motivated to do it on the beginning because keep in mind, they're missing payments. So they're like, well, if this is going to allow me to stay in my house for the next few months and not make payments, as I'm also communicating with my bank on a solution, they're going to do it, right?
Yeah.
So buy them a few months and then they come back to you and then if they start the short sale and that buys them more time. So let's talk about that. So now they come to you, they're ready for a short sale, right? And the house is in good condition in this case. So is that property still apply? Can you still do a short sale on a property that doesn't need any work?
Yeah, it really depends. I mean, if it doesn't need work, but they also owe more than what the realtor can sell it for, there's steps that go involved. So you have steps that are, hey, you get an offer and you have somebody, every short sale has to be put on the market. You have to work with agents. So that's why I work with agents in all these different states. You work with an agent. I have agents that are all over the place, all over the country that we work with them and we say, hey, we need you to put this short sale on the market for us. And we list it as that. You have to disclose certain things in your listing that it is a short sale, that it is going to take time because most buyers, if they're just, coming off and they're saying, hey, I want to buy this property, they don't understand that it's going to take time. They don't understand that there's procedures and there has to be an appraisal that's compared to the you have to compare it to the offer that is made. And then they let you know if they meet the minimum net value. So every single one of the short sales has a process. And if it's an FHA loan, if it's a conventional loan, if it's a VA loan, they all have criteria that they have to meet, that when you're submitting these packets, is this offer meeting this criteria based upon the appraisers? And then we sometimes get crappy appraisers, and that's where my experience running a real estate appraisal business definitely helps, because I've had to really, there you go. There's the percentages of every appraised value. Sometimes I have appraisers that go in blindfold and with their nose plugs on, and I have to go tell them that they have to go back and do their job in a nice way. But no, I'm not. I'm not
So
happy because it drags it out. Right now, we've seen FHA cut their appraisal times down to 90 days. It used to be 120. So we've seen them shorten the time frames as to when those expire.
oh, got it. Okay. So these on the screen, what you see are the percentages that they're willing to take as a short sale based on the value that comes in from their appraisal or broker price opinion. Or do they do appraisals too, or is it mainly BPOs, broker price opinions, which are done by realtors, guys?
So if it's a conventional appraisal, it needs to be, sometimes those are BPOs. And then if it's an FHA or a VA, it's required by those lenders to have an appraisal. And it has to be a certified appraiser in those fields.
Perfect. Okay. So any condition obviously can qualify. That was not a trick question for you guys listening. So any condition, the condition has nothing to do with can you do a short sale? It all has to do with how much debt is on the property, right?
Correct.
If it's underwater, it qualifies, period, right? Now, of course, if the property needs work, and this is where I did a lot of these in New Jersey and in San Diego, where we would literally and Jeff, you know this, I know Jeff from San Diego at CT Homes. So I used to run that investing business in San Diego CT Homes. And this was 2010 when I joined them. And what we ended up doing there, we partnered with the negotiator and we said, look, Mr. Listing Agent, we see you have a short sale that needs work. We would love to submit an offer on it and we're going to pay for the negotiator fee. And they're like, well, I'm like, you don't need to do anything. You can represent us and we will pay for the negotiator fee, right? So we literally delivered everything to them on a silver platter. And we said, look, we will meet the BPO agent at the property. we're going to provide them scope of work with contractor bids, right? Because that's the name of the game when you're dealing with short sales as an investor, right? It's determining the actual as is value, right? With backing of different quotes of how much it requires, so that BPO agent, which it's a realtor, is trying to come up with value. Sometimes it's an appraiser as well, and we would provide those to that appraiser. But we, the investor, we would do that work on behalf of the listing agent. Because to me, that was the most important piece of the puzzle, the
That
BPO.
is,
Like, if you miss that, you're done. Like, you don't have a chance, right? So that's how we did it back then, and that's what I would love for you guys to take away from this too. If you're gonna get into this, like, you got to do some of the legwork in your local market. Now you need to either learn how to process short sales, or you can partner with someone like Alicia, let her handle the processing. And I will tell you, the success rate is going to be very different if you do it versus her. Why? Because this is what they do, and they already have relationships that they're slowly building at these servicing companies. And I can tell you from personal experience, I would hit my freaking head on the wall trying to get a hold of a servicer and get answers 15 years ago during the last stress, doing it myself. It was the most annoying part, because they're just employees getting paid per hour. They follow their little guidelines. They try not to stay, sway from it. It's like, it is stressful. But anyway, that's enough about that. Now, before we kind of go into other questions, deed restrictions, let's touch on that before we forget. Can you talk about the deed restrictions? So now you process the short sale, right? And the sale.
can I give a quick example of what you just said? Steve
Yeah,
Stack is on. He brought
yeah.
us, he's a realtor. He brought us one that's upside down. It was a great property. He was like, and it doesn't really need work. It's just wonky, but the appraiser scheduled himself just as a homeowner to go see it. And we have it where we cover the banks. We have to cover the bank. We can't just go ahead and put it at the number that we think it is until after the appraiser. So he just scheduled himself, and he went ahead and appraised it, used comps across the city, across into another city, or across the river, across into another city, major highways. Why? There's over 7 2-bedroom, 1-bath houses right around there that they could have pulled comps from, but he thought it was a purchase appraisal. So that's a key point you just made. If we would have met him there, or one of our team members would have met him there, or if it's another state, we make sure that realtor or the investor meets them there and says, no, this is a liquidation appraisal, do your job. So that just kicked it out 6 months. But that's to your point. It doesn't mean that it's lost. It would have been lost if it was with a different person. They would have lost that because they don't know how to fight it. So Steve knows, he's seen a little bit of action on our end of just how we go back in and fight it, and how we make sure that homeowner, most importantly, doesn't go into foreclosure as we're fighting and beating them up, because we have to bring in all kinds of big guns to make sure that doesn't happen. So it's a very key point that will get straightened out. But it's a key point that we don't miss the appraisal. We don't miss the evaluation. That's what determines all of this to make it work. And then you have to fight like hell to make it, to rewind the clock, if you will. But anyway, what was your question? I'm apologizing.
No, so once you guys actually get the short sale approved and it sells, there's deed restrictions that come with it. So I don't want to forget about it, because that's very important for everybody to know.
So we are just upfront with it. Once we know what type of investor is behind the loan, typically early on in the process. So our system is, we're doing borrower questionnaires, we're doing lender questionnaires, we're finding out who the investor is behind the loan. There is one that's, we don't even mess with them because they don't like it. We did just win one, but it's a big bear to win. It's VRMTG. It's essentially a BlackRock company. But the deed restrictions for the FHA and the VA loans, there's no resale restrictions. It's mostly conventional loans and the Freddie Macs. So those can be 30 days. So I've had investors at times, they'll take it down and they'll do their rehab. It might be a 30-day, it has been up to 90 days. We did have one in 90-day restriction. They did their rehab for the first 90 days, and then they put a lease purchase occupant in the property on the 31st day. And they did a lease option where they just basically executed a lease, and then they executed the actual purchase of the property later on down the road. So that investor wasn't just sitting on their thumbs for the next 60 days as that restriction was playing out.
So you can't, for example, have you, let's say you're involved. You help me negotiate a great deal on the property and as is condition where maybe there is a bit of a equity play there left for me as the buyer. I buy it, it's a Freddie Mac loan. I cannot put that right back on the market within 30 days, correct?
Yep.
Okay. And then 30 days is up, then I can't put it on the market for more than 20% for the next, after 30 days until
Yeah,
90.
60, yeah, correct.
Okay, so for the next 60 days after the first 30, I can't make more than, or I can't, I guess in this case, list it for more, for 20% or more than what I bought it for. Is that?
Correct.
Okay.
Yes.
And then after 90 days, I can do whatever I want.
Yeah.
Okay. All right.
We work with some pretty savvy investors, and I just gave you a picture into high level picture of what, some of them, how they deal with those deed restrictions. They're there to help the homeowner get out of foreclosure. They're there to get it all done. And they're the ones putting in the work, right? They're getting in there and they may have that restriction, but that house would not have that value unless they went in there and did that rehab in the beginning. So it just means that they have to hold on to it a little longer.
So another idea, and this is coming back to me, Alicia, from those days, is if you know you're getting a great opportunity, right, on a beat up home, getting approved as a short sale, it's got plenty of room, right? Once the property is rehabbed, so it's a great flip opportunity, right? With a big, pretty good, some meat on the bone for the rehabber. If you're not the rehabber and you want to maybe wholesale it, you you open the LLC specifically for that property. Right? You transfer ownership of the LLC to the new buyer, which does not trigger a deed restriction.
Correct.
So you're
Yep, that's another.
basically selling your LLC. So
Yep.
it stays on the deed, that never changes. So the deed restriction is no longer an issue, and you can literally get paid on day 2 of your closing after you do a short sale closing.
Yes.
We've done those. So
Yep.
another way to get around deed restrictions.
They make all kinds of rules, but rules, there's always a way.
Yeah, and it's a legal way, right? You're allowed to do that, right?
And
So
the bottom line is you're still helping the homeowner. You're still accomplishing the goal of the bank. Most of the time, short sales are more profitable than them going to an REO, going to the auction at the courthouse steps.
yep. Cool. I know
And
I've been talking a lot, and we're gonna go over, guys. So this is such a good topic. We're gonna go over a little bit, but Eric, I want to give you the floor because
Yeah,
I know Alicia, I've been in this market. I don't know if Eric was probably like what, 10 years old at the last crash.
I was in middle school in 2008. That was gonna be my comment, but I was like, I'm gonna be quiet. I'm not gonna. When you guys were like, "Oh, we were in short sales," I was like, I was in gym class, so that was not gonna get brought up on my side of things. So, I do have a couple of things. So, like, I guess one of the things would be, and we're seeing it, I think, in the Florida market. But if you bought a home 5 years ago, we're not seeing as many of those as distressed sellers. For example, I have a listing where it's a condo that they bought 4 years ago. Prices are starting to come down, but they bought it for 300. We're selling it for 600. So are you seeing that the people that are doing the short sales and foreclosures right now are those people that bought in the last year or two? Are you seeing it where maybe like, and I'm not as familiar with the Kansas City market, some other areas where maybe they just didn't appreciate as much? Because I would think if somebody bought a house, I don't know, even in Cincinnati in 2019, the equity they have there, you could almost have a cash buyer come in and purchase it without even having to go that route.
yeah, oftentimes we wouldn't see those referrals because, we're doing 90% of our work on referral basis at this moment, or
Okay.
95.
Yeah.
But so I wouldn't see that as much. But you're right. There are equity deals. There's plenty of them. The ones that we're seeing are the ones that were flipped and rehabbed and kind of
Okay.
during that era that people just
Yeah.
kind of went ahead and bought, or that price, where everybody was like, hey, I'm going to increase my price, or I'm going to pay $20,000 over sight unseen, waiving all inspections. Those are the kinds of things like we're seeing here in this market. And when they waive all, and I know what's happening in the Tampa market because one of our partners is down in that area too. So that Florida area, we're seeing a ton of
Yeah.
those bad builds that,
That was that
people just
lady. That lady
didn't pull
that
down.
told me, Eric, was that she bought what
Okay.
she said, like literally sight unseen, moved from New York,
Yeah.
bought a condo and on Magdalene Lake.
Yep.
Yep.
And Land O'Lakes. Yeah.
Yeah. and bought it peak, you know, paid whatever just to get in here. It
Mhm.
was 2021, I think, and now she's like over it, man, and she's upside
Yeah.
down.
So
And
most of the ones we're seeing are like 20, like there's almost like a line, like it's like 20, like almost as soon as rates started going up was like 2023, because that's when all of our appreciation stopped in Tampa. Like as soon as the rates went up is when it really just kind of balanced out. So like at least on, because we do some motivated seller calls and stuff as well too, but when we're calling people, you know, if they bought in 2018, it's still like, okay, well I paid 150 for it. It's like crap, this thing's still worth like, you know, even needing work like 300. So I was just interested to see if that was kind of more near term, but I could see, you know, we are talking about, you know, people that were in the forbearances and stuff like that once that gets tacked on and they have to start paying, or they're already in a financial tough situation and stuff.
Depending on what their situation was during the COVID era, you know, if
Yeah,
they were able to financially support themselves, if they were out of work and or they had a loved one that was out of work, oftentimes they took out those partial claims or those took out all the equity and lived off of it. So that's
yeah.
where
And
you're
then the other thing I wanted to bring up that like I always find it interesting, and but it's just like if you get on like Twitter or anything on the internet, it's like short sales, the world's falling, we're through the roof in foreclosures. Look how much it's gone up in the last 6 months. What's your take on like, but we, you know, you weren't even allowing short sales or foreclosures for 4 years. So those numbers are obviously going to kind of go back to the mean. Like technically right now we're still lower in terms of short sales and foreclosures than we were 2019. So I always think that's interesting too. Like I think we're going to see it increase, especially with all these forbearances ending. But I always try to look at the other side of like, okay, for the people that are out there screaming doom and gloom from the rooftops, and there definitely might be, but it also could just be this wasn't allowed for 4 years. Of course, the numbers are going to go up over 6 months. Like it depends on the sample size you're taking.
Yeah, no, it's definitely been a Band-Aid. Like some of the statistics that I was talking about with the COVID waterfall program that's ending this September, the one that the
Mhm.
VA moratorium that was just put back in place in 2023 until this year. So it was just putting a Band-Aid on the problem. It was like, oh,
Yeah,
we don't want to deal with this right now. So let's go ahead and I think it was gosh, I don't want to get this number wrong, but I think it was $2.7 trillion thrown at the economy during that time frame that was just kind of
yeah,
money thrown at the problem. So eventually that's going to bust, right? You can't just
yeah.
continue to throw money into the economy and you can't tell everybody to stay home, don't pay your bills, don't worry about the mortgage, don't do all of that and expect there not to be a fallout.
Yeah, no, I agree. I definitely think I kind of fall in the middle. I definitely think we're in for prices coming down and foreclosures and short sales increasing. Again, I was in middle school 2008. I didn't see the same signs that everybody else saw, but I personally don't know if we're going to see another 2008. Like, I just some of the kind of, I've talked to, you
We
know,
are
lenders and
higher
stuff.
than default rate right now than we were at that level point in like 2006, 2007
Yeah,
era. Statistically higher than default rate now. If you have FHA, a million of those are 14% of them are in default. It's like
yeah,
those workout options, those folks aren't going to be able to do the partial claim again. I mean, I have folks that have 3 or 4 partial claims. This means every
yeah,
year they decided to go and say, hey, we're not paying for this year. And they went to the government and the government bailed them out. So that stops now. All those
yeah.
government are no longer going to be available.
For sure. And I think some of the questions that we have in the group, I think, so the moratorium's ending in September. I'm going all the way up to the top. Do those end? Is that FHA, VA, conventional, everything, or is that just the VA that you were talking about?
The VA ended in May of this year.
Okay.
The September is the FHA moratoriums that
Okay.
are ending. So those folks are going to be having a harder time.
Okay. And then this one was a good question. So Ross was saying that if you're negotiating, you're buying a short sale, the more you negotiate off the price, does that hurt the sellers? Because he said he's kind of struggling with that ethically. Like if he's negotiating it, should he be negotiating the best deal, or should he be trying to play a fine line of maybe trying to, does it hurt the sellers if you get
I love
rock
this
bottom
question.
dollar?
I love this question. So that's something that I was, struggling with as the first year or so as I was learning this business. And the answer is no, you don't hurt their seller. No, they don't owe the money. And I believe that all states, I think there was one state that was just their policies. We always disclose that there's a risk that you could be used. You have to disclose it every time. I always talk about it in my intro conversation with these homeowners. Hey, there's a risk that they could tax you as income earned for the difference. So if I took off $50,000 of your house, they could look at as income earned. Every state that I know of has a law in place that prohibits that, but they
Nice.
still disclose it because it's the servicer, and the servicer facilitates all these different states. But I will say William, who's been doing this for rock solid for 25 years, has seen it 5 times. That's his statistic that he's given us, that as somebody that came back. So 5 times out of hundreds and hundreds. And he does, I would say over 200 something. I don't remember but every single case that he's taken against the IRS to get tax liens off of property so that we can work a short sale, he's won every single case. So that's a huge hitter in our backfield, because if sometimes those are the barriers for those houses not to be sold because they have an IRS lien. But anyway, I digress. But no, I really ethically and morally wanted to always meet people in the highest standard that we can. And we are always making sure that that's not going to hurt them. And every case, every short sale I've ever conducted, nobody's ever had the tax implications later. I've had that question over and over and over, because people do their Google research and they'll say, but I'll owe the difference. No, sir. No, ma'am, you don't. And
Yeah.
here's your proof. Through our processing, we'll show you.
And they specifically are not
like when
allowed
you
to.
buy a house and you agree to a term and a price, the bank lets you go at that price. They say, okay, now we're agreeing to let it go at this price, and it's done.
As a write-off, yeah.
So they can't, outside of the tax complications, they cannot file a judgment, the bank, for the difference.
Right.
That was a
Correct.
big thing during the last crash, where that wasn't clear, and a lot of the servicers were forced to put that sentence in, because sellers were like, well, then I'm not selling it as a short sale. Like, why would I agree to a short sale and then you can come back and sue me? Like,
Yeah.
You look
no,
at state laws, and I think there was one state, I would be tested but out of the 49, there was one state that they were still amending the law, but the congressmen and women, especially now with the climate that they are seeing with their constituents, they went to that and they said, no, we need to have this amended. We don't want any of our people that are distressed. You're not going to charge them if they're trying to get out of their situation. So it's essentially, from what I know, all 50 states have laws against somebody getting tax back.
Okay.
But that's a great question, and I love it. And we're not fighting for the bank. We're fighting for the real price. It's what the homeowner doesn't care what we sell it for. It doesn't, I will go to a homeowner and it's like, I don't care if a realtor brought it to me, an investor brought it to me, or whatever. I'll say, this is what I need to do. I need to drop the price because now the appraisers come through and we can make a $60,000 adjustment. And oftentimes it's already under contract, but I'm going to legally put it back down on there. Sometimes it depends on where all the factors are, but I'll drop the price and I'll say, nope, this is where the value really is for this property. Or sometimes we don't have the need. That's already approved. We got it approved. We did the shortest approval. I think I got one in 4 days just recently, because they're starting to change. And I was like, here's the contract and all of the paperwork that's needed. 4 days later, here's your approval. And I was like, okay, that works. So
Are you seeing
wow.
Are you seeing more banks be like, especially on the foreclosure side? I think they'd be more willing to do it because there is equity tied in houses right now. Then on the short sale, are you seeing them be more reluctant to do it just because of the climate that they're in? Like, if their payoff amount is 190, are you seeing them, like, are they trying to fight to get a higher amount? Like, what are you kind of seeing on the bank side of things?
the banks,
Or
they are
servicers? Yeah.
the banks and servicers, they're really relying on the eyes and ears of the appraiser and the BPO agent. And that's really
Okay.
why it's important. What Randy was saying is, so that's why that's one of the most important pieces, that they're doing it with their eyes open. I'm like, when you're pulling comps from another, city all entirely, it's a much better city, superior to the city that they were pulling, the subject property was in. That makes a difference. If you go into a property and you willfully, blindly don't smell the mold, or you willfully, blindly don't see the hole or the foundation cracks where it's evident that there's water been flooding in this basement, like, you have to notice that as an appraiser. And sometimes I've had to hold those appraisers. And again, my history with appraisers, and I have family members that still are, I love them, but you got to hold their feet to the fire and say, nope, you got to go back with your blindfold off and actually look at what you're seeing and give us a real value for this property, because the investor needs that too. We need to work off of the actual value of the property and then get it for less than that to make it make sense for the investor, so they have that high spread.
Yep.
And the realtors are getting paid basically to do the paperwork. We're doing all the heavy lifting. We're doing all the the ins and outs
Yeah.
of it. And they're kind of saying, okay, well, and they're just adjusting. The biggest thing that I can, and Steve could attest to this, I'm like, just listen, just do what we say. Don't overdo it. Don't put a lot of time and effort into those kinds of things, because it's an evolution, and there's just steps, they're milestones. And we just check back in with the realtor and the investor, the folks that are all involved in the process, and saying, this is where we are in the step. And that 4-day approval, I want to be clear, it was an approval. It doesn't mean that I closed it within 4 days. I think the whole process of that one was about 3.5 months. But it was, it was the approval, and then they give you the letters, but it was a very quick, like, yep, here you go. So
I
That-
want to tell Larry, so Larry wrote, how to get the repair costs, and I know you answered this question, but just so you understand, Larry and everybody, you are signing a purchase and sale agreement with the seller. They still own the property. The bank doesn't
Yep.
own it. It was never foreclosed on. That's what we're trying to help them avoid, right? So it is not an REO. So the seller has full control of the property and the asset until either a short sale happens or it gets foreclosed on, right? So you're signing an agreement with them. They obviously will let you into the property to do all the things you need to do, right? For the package that either you or Alicia and her company will submit to the bank, right? And then Alberto asked, any different rules if the house has to go? Do you mean, Alberto, like the house is condemned and it needs to get destroyed? Is that what you mean, Alberto? I don't know if you can unmute yourself, but
Yeah, that's what I mean. The house is condemned, it has to go. But it has a mortgage, but it's not enough
yeah.
equity at that point.
Have you seen that,
That's
Alicia,
better.
where the house has to completely be taken out?
Not really. I mean, we've had a couple cases that it's a lot of city liens, a lot of code violations, things like that. But if you have an active buyer that's an investor that says, "Hey, I want to come alongside, and I will basically make a commitment." We have some that sometimes you have to have the buyer sign, "Look, I acknowledge that these city code violations are here. I'm buying it anyway," but they're buying it for hundreds and hundreds of thousands of dollars less than what the retail price is, and they're going to fix it up and make it pretty again. So they have to acknowledge it sometimes, and can get around those city code liens.
And I would say, Alberto, too, let's just say, worst case scenario, like the city says, no, this has to be, this was, let's say they said this was a meth house. This completely has to be destroyed to the ground. And and it's been proven by the city because there was a battle that the seller had, whatever. It's 100%.
One. Yeah.
Then guess
just
what?
want-
It is what it is. Then the bank has to be faced with that now. And you still could do a short sale the typical way. Now, will the servicing company be thrilled and be fast on acting on that short sale? Probably not. They will probably take a long time to make a decision, right? Because they basically are scratching an asset and now it's just land value. Pretty big hit in most cases. However,
Once that recognition, sorry, I didn't mean to interrupt, but once that recognition by the servicer is recognized, we've had those cases,
Yeah.
and they're like, I would rather take something than nothing. Yes, you'll have a buyer that will take this place that's condemned. Like, please, please, please sell it, because they
Yeah.
are looking at land value. 100%.
they have no
Sorry, Randy.
choice. They will have no choice because what's their other choice? They will foreclose and now they have to deal with the city and the same problem. Like, congratulations, now you own piece of land with a house that you can't do anything with. So, but it just takes time for them to get on the same page, right? And let that sink in. That's the hardest part, right? But at the end of the day, it's still a short sale. And I want to ask you, what is the largest amount that you've been able to short?
Over 6 figures. I'd have to look to see exactly, but we've shorted a few 100,000. Yeah.
Yeah, because I don't remember now specifically. I think one of mine was like over 200,000. And this was
Yeah.
like early on in my career, and it blew my mind that I literally was able to call the bank and just ask them to take a short of 200 something thousand. I was like, how is this even possible? Because like I always say this, I'm from Poland. In Poland, man, like people don't understand how good we have it in America. In Poland, they will take your shirt off your back before they will let you off any debt. Like, I mean, it is not reality what we are able to do in America to get back on our feet. We are in a beautiful country despite all the chaos and the craziness that's happening and has happened and will happen. This is the most beautiful country in the world that can really get us back on the feet and the people we work with through things like loan mods, low success rate, but they are available, short sales, even foreclosure and bankruptcy. Those are still options that some countries might not even have, right?
Yeah.
So just keep that in mind when you are approaching the situations, and it could feel heavy at times because you're talking to people, they're crying. I mean, I've had, I'm sure Alicia has stories for days. You're going to have very heavy conversation, almost like you feel like you're a therapist in many cases. And at the same time, you could be the light in the situation for them because you come with solutions. It doesn't cost them anything, right? All these fees, which I want to kind of finish on, all the fees for the services that Alicia will do and realtors will do or an attorney will do, those are covered by the bank, not the seller. And instead, what usually happens, and Alicia can confirm this, the seller might walk away with maybe 1,000 to 5,000, maybe even more in money to help them move. Can you confirm some of this? I'm
100% that my nursing skill set has it feels like, did I leave that industry? Because it's crying. It's a lot of people that are in high distress, but you want to meet them where you're at. That's where it's a very gratifying thing to do. It's very painstaking at the same time at times, but when you get a system and a process, it doesn't matter. It's like, nope, we're going to get you through it. So it's a very confident level, but yeah, you're taking them through all these emotions, you're meeting them where they're at, and you're helping them find solutions, get a little bit of money in their pocket. If they're still occupying that property, we always ask for relocation fees. We're always going to fight for that for them. And we're seeing more and more of that all the time. So I forgot, I think I missed one of your points there you were asking me about. I'm sorry, but yeah, it's
I think you
100%
covered it, but just the stress.
fee-free.
Oh,
Yes, the buyers pay the negotiator fee at the end. The bank 100% covers all the realtor fees. It's typically 6% for the realtors agents on the call. We always tell our agents to put 6% as your commission. Oftentimes, if it's a in-house commission or if it's somebody that's doing both sides, they may ask you to bring it down to 5, depending on what the bank says. But most of the time it's 3 and 3, or however that works. Even 6%, I've collected 6% on both sides of the fee as well, when I know the buyer and I don't have to get, another agent involved. So both of those work. The bank pays for the closing fees. All of that is worked into the numbers. And at the end, oftentimes the buyer will pay the negotiator fee, and they always pay it because they're getting it under appraised value. They're getting it sometimes hundreds of thousands of dollars less. Back to your point about the biggest negotiating, I didn't do it personally. I know the guys, especially William, has done high numbers, but I do speak with, you mentioned we are getting to know the banks and servicers very well. One of the gals I was on the phone with, she's a negotiator on the bank side. And she was saying that there's over $1 million spread that she was working on. It was a New York property, but it was an over $1 million spread that she's like, yep, this appraiser, She was just kind of talking to me about her job. So we were on hold, like listening through things. So some of the values can be very high. I'm in the Midwest, so I'm not seeing tons of those, but as I branch out onto the coastal states more and more, I'm seeing higher and higher volume as far as that short sale.
well, we're going to have you back, Alicia. We got so many things I can talk about this. I mean, this is just scratching the surface, but I wanted to bring you on the moment you said you were somewhat ready. I know it's never perfect timing with everything that's happening, but I want to thank you. And if anyone wants to reach you, I have the website put in the chat. This is what you will go to, and you can submit a file right on the website to them. All right. I'm not going to go through this. There's a lot of questions there that are based obviously on the situation, but all they would need to kind of get started. And she will then, her and her team will talk to you about the fee structure and all that. We're not going to get into it today. We're way over time, but thanks again.